Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. New York, the U.S. economy will need tight monetary policy for some time before inflation is under control, a fact that means slower growth, a weaker job market, and some pain for household and business. Federal Reserve Chair Jerome Powell said on Friday in a remarks, warning there is no quick cure to fast rising prices. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions, with higher interest rates, slower growth, and softer labor market conditions will bring down inflation. They will also bring some pain to husband and business, Powell said in prepared remark for a speech to the Jackson Hole Central Banking Conference in Wyoming. And Sandra Chase, Chairman Powell, spoke at Jackson Hole, where he maintained a read the waxed stage the U.S. Federal Reserve is taking toward the current high levels of inflation. In a short and conscious speech, he made several points. Firstly, that the economy was still showing strong underlying momentum and that the labor market, in particular interest rates, will continue to rise to a restrictive stance and importantly stay there for some time, partly because the Fed views it will take time for inflation forces to decline, but also because in previous inflationary episodes it was a mistake to relax policy too early. In short, the speech was hawkish, and we would expect yields of government debt to continue to rise. Powell's short but direct speech was focused on delivering a message to the market to reset expectations for a longer period of maintaining tighter monetary policy conditions in order to successfully combat inflation. He provided a historical context and justification for the need to maintain level once the current cycle peak is reached and ended the Fed's willingness to do so even in the face of recession and steep unemployment. So, the headline summary is that we are getting closer to the peak, but we will plateau for an extended period prior to any potential path downward. And it was pretty much in line with what we're expecting, and that's even though they don't want to give forward guidance. They are going to try and quit markets to the idea that they are going to slow down the pace of the hiking cycle, but they are going to offset that with the idea that rates are going to be stretched for longer, and that was what stressed within the actual statement. The duration is now the preference having a longer period of tighter monetary policy as per continuing firm loading at the expense of potentially having to cut rates in the future. And I don't think markets necessarily prices the quarterly to begin with. This was a speech for likely because this Fed has been tarnished for its stubborn transaction view of rising inflation, which was explained by a perception that Powell would not be taught enough there was initially to expand inflation from the economy. By invoking the work of the Fed chairman who have to deal with inflation pressure, Powell made it clear how he wants to be listed as a Fed chair who restored price stability in order to restore a strong economy foundation. Given the backward of using financial conditions since early July, as we expected, we have seen a pullback by Chair Jerome Powell on the market's assessment of an immediate pivot by warning against loosening policy sooner rather than later. Whilst inflation has started to show signs of turn, some of the more resilient and persistent companies remain elevated. In addition, the labor market remains tight, the one sector which is showing signs of clear slowdown in activity is housing. In speech on the table for September, we have now revised the terminal rate to around from repeatedly and think rates may remain higher for longer, which seem more consistent with the Fed's stance of giving police vacation until clearing signs of economic and inflation slow down appear. He currently focused on the expansions channel and so talked a lot about rational expansion, which the Fed believe would what happens with making inflation permanent. Maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe. Bye.